and gentlemen, I am Dr. Pradeep Panda, an assistant professor of NISM. It's a great pleasure to welcome all of you to our dignitaries, participants, discussion, jury, and panel members for the third panel discussion of this conference on social stock exchange, the way forward. So India is the largest contributor to number of listed companies, to the world listed companies. We are number one in many derivative instruments in terms of volume in all over the world. India also helps many countries to set up their stock exchanges and capital market regulators. In the inaugural session of yesterday, the Honorable SEBI Chairman has told India is soon going to establish a platform in the existing stock exchanges, especially for social stock exchange. Now the questions are floating. What is a social stock exchange? How we define a social stock exchange? Whether the existing stock exchanges are unsocial? How we segregate the social and other than social stock exchanges? And this social stock exchange is now part of the press. All of us are aware that Honorable Finance Minister in 2019-20 budget speech has announced that SEBI will establishing social stock exchange. Further, a working group committee was set up by SEBI in 2020. Based on the recommendations of the working group, SEBI constituted a technical group to provide regulatory framework for the governance of social stock exchange. Now, this social stock exchange will help the social enterprises to raise the funds. A social enterprise for profit enterprise and not for profit enterprise, not for profit organization to qualify on the social stock exchange should be able to demonstrate that social intent and impact are its primary goals, and that such intent is demonstrated through its focus on eligible social objectives for the underserved or less privileged populations or regions. Now, the global presence of social stock exchange is limited to 7. Brazil is the first country established a social stock exchange in 2003, followed by South Africa in 2006, Canada, UK, and Singapore in 2013, and Jamaica in 2019. Out of these 7 SSEs, only 3 are now functioning. India always sets an example by implementing latest developments in the securities markets. That's how Indian securities market is a developed securities market, and SEBI is regarded as the most disciplined securities markets regulator in all over the world. Without taking much time, let me introduce our panel for the social stock exchange, the way forward. The first panel member is Mr. Ved Arya. Mr. Ved Arya founded Srijan, E2F, SEEDS, and Buddha Fellowship Program. He is the founder, national convener of CSO collaborative called RCRC. Ved was a member of technical group of social stock exchange set up by SEBI. He is member of several policy making bodies, including the Advisory Committee, Promotion of Producers Enterprises, Ministry of Rural Development, Government of India. Ved is an aeronautical engineer from IIT Kanpur and a management graduate from IIM Ahmedabad. I welcome you, sir. Our next panel member is Mr. Amit Chandra. Mr. Chandra joined Bain Capital Private Equity in 2008 as a member of its Asia Pacific leadership team. He is the founder and chairman of its India office. His wife Archana and he received the Asia Heroes of Philanthropy Award in 2016. Mr. Chandra received his MBA from Boston College and was awarded the School's Distinguished Alumni in 2007. A year in which he was also named by the World Economic Forum as a young global leader. I welcome you, sir. Now, I welcome Dr. R. Balasubramaniam, who has joined virtually with us. And he is called as Balu. He is a widely respected development activist, leadership trainer, thinker, and writer. After his MBBS, he earned his MPhil in Hospital Administration and Health System Management from BITS Pilani. He is a master's in public administration from the Howard Kennedy School, Howard University. He founded the Swami Vivekananda Youth Movement based on the principles of Ahimsa, Satya, Seva, and Tyaga. I welcome you, sir. Our next panel member is Ms. Puspa Aman Singh. Puspa worked intensively with the Maharashtra government, constituted high-powered committee for reforms in charity administration, and served on the technical group constituted by SEBI for the proposed social stock exchange. Earlier as the CEO of Give India, Puspa played a significant role in getting NGOs in India to participate in the retail fundraising. Puspa is an MBA gold medalist and a senior global fellow of the Synergis Institute in New York. Now this panel will be moderated by Mr. Amarjit Singh, who is the Executive Director of SEBI. Mr. Singh worked with SEBI for the last 27 years, has extensive experience in regulation and supervision of securities markets. He is presently working as Executive Director in charge of Market Regulation Department, responsible for policy formulation and supervision of MIIs. He also heads the Department of Debt and Hybrid Securities, dealing with corporate bonds, REITs, InvITs, etc., and the Department of Economic Policy and Analysis at SEBI. Apart from an MBA, he holds master degree in Economic Policy Management from Columbia University in New York, USA. Now, I request our moderator, Mr. Amarjit sir, to take over the session, please.
Thank you, Dr. Panda, for the kind introduction. And it's indeed my pleasure to welcome all the distinguished panelists here. The Bharat is really, but we are lucky to have three of you in person here. And thanks for traveling on the way to the campus. I also welcome all of you who are present here in person and all the participants who joined online. And I believe the number who have joined is much more than what you see here in the room. Let me sort of begin by giving a bit of a background. Although I must say Dr. Panda did a good job of telling some basics about social stock exchange. But nonetheless, let me also, just deal with certain fundamentals before, because it's a relatively new topic, new subject. Different people may have different perceptions about what is social stock exchange. I think it will be helpful before I come to the panelists, just give a brief introduction as to what this social stock exchange is all about. So some fundamentals and then we move to the panelists. So as Dr. Panda mentioned, the background to this setting up of social stock exchange is a union budget announcement done in 2019. And since then, SEBI has developed the concept and the regulatory framework for setting up social stock exchange in the country. We set up two groups. One was the working group, and the second was a technical group to help us develop the recommendations and the roadmap for setting this social stock. And let me, very openly admit that SEBI didn't have the required capacity to do it, and we needed some expert advice, and that's why we constituted these two groups. And I'm happy to also mention, all the panelists today, they're all very accomplished people. I have worked with them over the last 2 years. They were part of at least one of the groups, so they know about this better than I do. So what is SSC and what is the objective? So SSC, it will not be a separate stock exchange. Let me say that first. What it is not, if you want to understand. It will be a separate segment on our existing stock exchanges. Just like you have SME platform or you have ITP platform. So this will be one of the segments on the existing stock exchanges we used to set it up. The broader purpose, as Dr. Panda mentioned, is to facilitate, especially the non-profits, to raise money from the social stock exchange segment. And also, it's not just the non-profits, it's also for profits. And we actually call them together as social enterprises. So basically, social enterprises comprising of non-profits and for-profits. This exchange will facilitate them to do fundraising through various instruments and so on. So who will be eligible to participate? So as I said, SSC will cater to social enterprises comprising both profit and non-profit entities. These social enterprises will have, that is our intention, they will demonstrate social intent and impact as their primary goal. So, and there is a list of eligible activities in which any enterprise which wants to use this framework has to be engaged in. And that list of activities was developed by the technical group with a lot of brainstorming behind it. We specified a list of activities, and that majorly he sources those list of activities from Schedule 7 of the Companies Act, which talks about activities which are eligible for CSR studies. So that is one primary source. Second source, what we kept in mind is the Sustainable Development Goals to which India is committed. And third was the priority areas which are identified by India. So basically, these three sources have actually been factored in by developing our list of activities which will be eligible for social enterprises, which will be an eligibility norm for SSC. What will be the instruments for fundraising? That's another basic question. So a variety of innovative fundraising instruments have been thought through, have been developed with a lot of debate. So I just mentioned one or two. One is the zero coupon, zero principal instrument. Another one is social impact fund. And third one, a blended finance product would be the development impact bonds. I'm not going into those details. Those who are interested may kindly see the two reports which are available on our website. Another important piece in social stock exchange framework would be the robust disclosure requirements. Disclosure not like any other entity, but a disclosure of the impact of the outcomes which a social enterprise is expected to deliver. So basically bringing in greater transparency. Second, another piece is social audit. So there again, after much debate, we decided that just to enhance the credibility of the organizations which list on social stock exchange, we said social audit would be mandatory from day one. And it's a new piece that we are working on developing social audit space also. We need social auditors and we need credible social auditors. Final piece, is the capacity building. All this is new. And if it is meant for non-profits, they will need some handholding. They will need some guidance. They may not be familiar with those stock exchange structures. So we envisage setting up a capacity building fund of the size of 100 crores, which will actually help the social enterprise, especially the non-profits actually, in the initial phase of their listing and distribution. So these are the key pillars. We've defined the activities, we've defined social enterprises, we've stipulated disclosure requirement, we put out the social audit piece, and the capacity. So these are 5 very distinct key pillars underlying our framework. So with that, without further ado, let me straight away go to our esteemed panelists. So first I'll go to Dr. Balu, who's in Delhi, who's very kindly joined us from there. So Dr. Balu sir, I have one question, I thought I'll just flag up with you. And Dr. Parna also briefly referred to the international global developments in this space. And I understand, in your research, in one of your research papers also, you mentioned that, number of countries such as UK, Singapore, Canada, Brazil, they've tried to set up SSE. And you mentioned that most of those experiments have been, not very successful, if I can say. And they are still transitioning from just a private placement or a crowdsourcing platform to a full-fledged social stock exchange. So I have two questions there. What lessons do you think we can draw from those experiences in other parts of the world? And secondly, the related issue, what do you think are the barriers to a fully functional and successful SSC, unlike what happened in other countries? Over to you, sir.
Thank you so much. Thank you for inviting me to share my thoughts on this. I must congratulate SEBI for having gone through the entire process of undertaking such extensive consultations before embarking on this, what I believe is a very critical, which is going to emerge as a critical landmark for India's social progress. So both your questions actually connected and related the way I see it. My view is that, we really can't expect a social stock exchange to succeed the way we define success from the traditional understanding of an exchange without understanding the entire ecosystem. Because the stock exchange cannot operate in isolation. I think several of the other countries which did not really adequately prepare itself and allow the ecosystem to mature have necessarily failed. And I think that's the most important lesson India needs to have. And that is where I think the working group and the technical group and SEBI has actually possibly addressed to a great extent some of the issues that could come up. So I see this whole thing in three areas. And the exchange is just one critical area. I hope you can all hear me. Can you hear me well? Okay. So I think it's three different areas, and the maturation of all these three verticals are very critical for an exchange to succeed, because exchange cannot exist in isolation by itself. It's not a homogeneous process. It's part of embedded into a larger construct. The supply side of the equation is the financing side. And that's also going through enormous transition. People are there in that side. People are learning developing newer tools, newer instruments, and understanding the ecosystem better, and more getting driven towards impact. It's completely different DNA. And that's something which the stock exchange possibly needs to look at if it has to succeed. I would jump to the third side. The third pillar is the demand side, the social sector. India has got a very diverse social sector, and that's something which all of us have to keep in mind. And this is a concern social sector also will have, because from a small NGO, possibly doing a Ganesha Puja or a Durga Puja at the street corner, to a large development organization, we have an entire spectrum, several different acts which are eligible, under which you can actually get yourself legally situated. And this space, which is now has to be ready to absorb the demands and challenges that the social stock exchange will pose, and the maturation of this sector. And the intermediary organizations, including the regulator, including SEBI, and including the exchange itself, which also has to evolve. And let's remember, the intermediaries have been traditionally looking at, Dr. Panda referred to this, SEBI's expertise itself has been exceptional globally, but we also have the NSE and what we saw recently. So we cannot run away from the fact that intermediary sector has also been strong for the entire process to succeed. So from playing the role of a regulator to a market maker to an influencer, there's so many challenges for the social stock exchange. So I think all the three have to be seen together. And if you look at the international experiences, countries which are evolving, it's a great, I think starting it after the 7 exchanges, we actually have 7, including Jamaica, social stock exchanges, and 5 what we call social stock exchange equivalents in the world. So we need to learn from both. And I think differential levels of maturation is what I'm looking at, and different countries. See, United States has got an ecosystem which is different from United Kingdom. And so I would say the closest that we have in our country is to learn from 4 or 5 models is what I'll take. Closer home is Vietnam and Thailand. Farther away, which is a much more mature ecosystem, is US and UK, and Canada. Canada also very provincial in its outlook and thinking. So British Columbia has got a different set of laws and different kind of an exchange. Nova Scotia has got a different set of laws and different kind of exchange. But what do we learn from everybody today? So to me, the demand side, I feel that wherever it failed or wherever it partially succeeded, was there a lot of clarity, the legal entity clarity, which is what, I think in India, I see it as work in progress, and we'll reach there. And I'm sure Pushpa is much more conversant on this, and she'll speak a little more detail on it. But we need to create the legal clarity of what a social enterprise is. We have tried to define it by function, but it needs to evolve into defining it by legality itself. And it's work in progress for us in India. So how do you create roadmap for transitioning, for organization to transition? So exchanges which did well are those which had a clear pathway for this. In the UK, if you look at it, defining a community interest company was extremely critical for success. And therefore, everybody had to either become a community interest company or they had to transition into becoming a community interest company. And that's where I see India at some point of time. And we're looking at, when places where it succeeded, tax laws as applicable both to the supply side and the demand side matter. And in India, I know that currently SEBI may not have the convening power right now, except to request. You might only have requesting power to negotiate with the tax laws that actually can facilitate for the demand side of the equation. Maybe it may be easier for you to enforce it on the supply side, but it may be demand side has got much more ramifications. So you have to deal with much more ministries and much more options, complex as finance ministry to home ministry. There are a lot of set of different kind of ministries that you deal with. So I believe what I would like to learn from the lessons is from the US, I would like to look at the legal framework. Even though they have a multiplicity of organizations, state and federal structure very strong. They are from B Corp to not-for-profit organizations who can become their social enterprises there. We can learn from them, learn from UK. I would like to take the context of asset locking mechanisms from the UK law, which we need to really look at as we start maturing. I think the UK has developed some very fine reporting structures, reporting instruments. And that's something we may look, because it can't be complex, though we have tried to make it comprehensive, but by making it comprehensive, we made it a little more complex than what organizations can absorb. So we need to relook at that. To me, the way I am looking at it is in the UK, you have something called community investment tax relief, which it's an amendment to the taxation structure itself. And so we may at some point of time, and these are all things which can happen over the years and will help us succeed. And the greatest reason, the highest level of maturation of this social enterprise, more than 11,000 actually exists today, if I remember, the CICs in the UK. And it's because the UK government has brought in a law for captive markets, where the government reaches out to these social enterprises for delivery of goods and services. From Canada, what we can learn is especially British Columbia, is their community contribution reporting structure. They also have asset locking, and they have sort of given a broader understanding of social enterprise, and I would be a little hesitant to imitate that. So what we should not do also, I would like to say no. The British Columbia system has looked at community contributing companies. They call it the CCC, CCC law. The community contributing companies, the mandate is only one of their primary purposes should be social. I think we are very strong on that. In India, though we don't have a separate law for social enterprises, I think the presence of people like Ved, Pushpa, me, and even if you look at the one composition today, with three of us from the social sector, and only one person on the supply side and you from the regulatory side. That itself is good hope for me. It abodes very well for the exchange. So I think we need to be aware of that. So I don't know whether Amarjit did this deliberately, but it's a good shift in SEBI's thinking. From the technical group, I was criticizing it as hardly any social presence, to the working group to today, where you really understand that SEBI has expertise in A areas, but may not have in B areas, and therefore reaching out itself with a very good mature sign. I think Vietnam's enterprise law is what I would like to look at. And ideally for me, in 3-4 years from today, we should have a law like that in India, because Vietnam is a very imitatable one. The greatest success, and I would watch Thailand very closely, is they took a decade to mature their social ecosystem. And then they're talking of a social stock exchange. So I think that is something India should have done, but now we are where we are today. And so we should look at how do we actually look at models which are very closer home. European Union has also created this mutual reservations concept. We may have to look at it. I also look at France in isolation, and would like to say that they have especially for India, what we can learn is as organizations are transitioning, like we have Section 8 companies, we have organizations registered under Societies Act, on the Income Tax Act. This transitioning pathways we may have to learn from France, where they brought in a concept called Solidarity Economy Act, which lays out this entire transitioning pathway. So I think somewhere we may have to look at those. Thailand, I would look at the sequencing, the way they've looked at the maturation. So the Thai Social Exchange Organization, TSEO, is something which I would also look at as our social stock exchanges mature. So the last point I would like to leave behind is, I am still not in the US and other places, though different laws have different mechanisms, having two social stock exchanges, both embedded in Mumbai, both close to each other, maybe close to SEBI, how well they would function. So my view would be, should we try out it just with one either BSc, which has got some more experience historically with their own social practices, or both have experience with the human socialization process that they've indulged in, and then look at how it emerges. In an ideal world, I would see all this happening together and the social stock exchange standing as an independent legal entity. But that's an ideal world. But I think we will get there. We have begun very well. That's my view. And we'll all learn as we learn from every other country. And I think once we crack the code, we might be the model for the rest of the world. That's my view.
Thank you, Dr. Balu, for sharing your takeaways from various countries' experiments in this space. And I am encouraged by your information that we've begun well, but I believe it's a long journey. And it seems like hopefully we are on the right path. So let me now move to Sabit Chandra. You are one of the pioneers in social investing, if I can say that. So my question is that we have a significant funding challenge, as a country for meeting the SDGs, the Sustainable Development Goals by 2030. So even if you just pick 5 of the 17 SDGs which we are committed to achieve by 2030, that there is a funding gap of Indian rupees 4.2 lakh crore. So what is your take on potential for scaling up impact investing in India? And what do you think are the barriers and how social stock exchange experiment can help in that direction?
Good afternoon, everyone. Thank you first of all to SEBI for inviting all of us to this beautiful campus. And it's wonderful to see a full room clearly the day is over. Amajit, my thoughts go back to when I transitioned from running a bank to becoming a private equity investor. At that point of time, India was attracting about $5 billion annually, and it's about 14 years or so of private capital. Last year, we ended up, just about a few months ago, that number was about 50 billion. So, just in about 14 years, India's private equity flows have increased about 10x. Clearly, from a supply side as well as the demand side, we've seen growth, unprecedented growth, which none of us ever anticipated. This shows us that where we can actually position ourselves well as a receiving community. And by the way, when I entered the industry, there were a lot of questions. We've gone through a lot of speed bumps. The industry had a lot of missteps in the early 2000s. So we worked ourselves through all of that. And as Dr. Balu was talking about, we had the opportunity at that point of time to look at what had worked elsewhere, and I think the industry had begun to actually work through all their issues. Once we had combined all those learnings, I think we were able to set a new foundation for explosive growth of the sort that we have seen. And I think that's where we are today when it comes to impact investing. If you look at how much impact investing is as part of the overall private equity industry in India, it's actually minuscule. Last year of this, 50 billion, less than some low single-digit number, 4-5% will actually impact investing. Globally, impact investing is has about $700-800 billion of assets under management. So it's the fastest growing part of the private investment volume, right? So if you really step back and think of it, India and Africa is where, if people want to invest to see impact, that's where the opportunity is. We have investors who are seeking to, make impact, but the place where really they want to make impact and where people are organized to take money, which is India, is actually getting very, very little funds. That's where I think a organized exchange like the social stock exchange will play a very, very big role. I think Dr. Balu made a very important point. just an isolated exchange can do anything. You need to have the plumbing around it, the infrastructure around it. I think when I came back to India and started my career at DSP Merrill Lynch, I remember my first set of trading actually happened in a pit at Bombay Stock Exchange. But it was, I remember going back to the Ministry of Finance and then SEBI, which came up actually after that, put up the entire plumbing to set up what today is one of the world's most sophisticated trading systems, right? And that includes depositories, it includes exchanges. And today we actually trade at amongst the lowest, if not the lowest, exchange costs in the world. Lowest default rates, really sophisticated information systems. And so the stock exchange, the social stock exchange will have to go hand in hand with a lot of other infrastructure. And I think the task force, both the groups have thought about that and we are putting all of that in. So stepping back, I think this is an incredible opportunity. It's an opportunity where, going back to the numbers you talked about, we know on the demand side there's a massive demand for funds. We know on the supply side, people want to provide their money. What this group is trying to do is bridge those two with a pipe. I think the faster we put that pipe in place, the quicker these funds will flow in a smooth way. And that's an amazing once-in-a-lifetime opportunity. It's a sort of opportunity I think we've executed before with the infrastructure that this country has put in place for the security market. If we put in place that infrastructure, I think we will see remarkable things happen for the social sector.
Absolutely. What you mentioned, that's what excited me personally also when this whole idea came out. That SEBI should clear this initiative. And we were initially under talks, the social sector and capital markets are two different animals altogether, right? So, but then, we thought we had a lot of expertise in the stock market processes and fundraising, various historians, frameworks, intermediaries, are all in place. So the challenge was, how can we leverage our strengths for the benefit of the social sector? And that's how, we developed our thinking on this matter. So let me now turn to Vedji. So Vedji, you have tremendous experience of the social sector. And so my question is that, as you were also involved in this process of developing a framework, number of requirements have been put in place, especially on the disclosure side and also the eligibility side. So what is your take on the readiness of social enterprises to be part of the SSC ecosystem? Do you see number of social enterprises ready for this? What is the state of readiness? Because they will be assessed for social returns and they will have to expect some disclosure commitments on the impact side. And also the related question would be, my presumption is that perhaps we have to, non-profits have to go somewhere before they come to this. How can the capacity building fund help?
Thank you, Amarjit ji, and I want to compliment NISM as well as SEBI for initiating for organizing. And what it tells me is that not only did the group and SEBI actually has recommended the creation, that in the following up it means you are serious. So I'm very glad Balu is here and the previous one. First of all, Balu, Amit is also on our side for listening. As so as Amarjit ji, we have fully, what should I say, we brought all of them together. That is very to him as well as to us. But on the lighter side, you said whether we are ready or not, very like we are professional beggars. Earlier we used to have proposals and I can't sleep unless I have a proposal a week myself. Now I have to do ZZP or DIB or various other instruments I have to learn. So that is on the lighter side. But a little bit of ecosystem thinking that we have to do is, what is the ecosystem here? I was speaking at a meeting yesterday where Prime Minister spoke that what are your suggestions for improving just 25 million households, bring them above poverty. Again, to give you a context, there are in the National Rural Livelihood Mission, this is organized by the Ministry of Rural Development. Mr. Vikas Singh was there. 16 ministries were there. They were also on the side of making, including DOT, including METI, all of them were there. All sitting the tune of what Mr. Anderson had called them. MORD was there. The challenge out of 80 million who are in the self-help groups. If you just pick even 25 million, 2.5 crore families, bring them above poverty line, what are the solutions? So, Government of India has, Ministry of Rural Development has 76,000 crores. So, whatever that means, for $10 billion, every year they put in, that is productive infrastructure. You can call it. Social infrastructure is all the state rural livelihood missions that they have, and these SHGs, there are 80 crore women. And add to that is our 10,000 community resource persons in the NGOs. I represent this coalition where there are 85 NGOs and we reach 1.6 crore people. That is social infrastructure. But financial infrastructure is not there. And the reason I mentioned it is because government money, this 76,000 crores for community, should go to build productive infrastructure, including environmental infrastructure, where groundwater is going down. In Punjab, and there are 33% of India's blocks are red blocks. If you go to our survey of the groundwater, and NABARD cannot invest in red blocks, cannot finance. So, how to even environmentally look at the productive infrastructure, that is the job of the government. But the financial infrastructure where social stock exchange comes in is because government is not giving any money to NGOs. Now, in unlock 80,000 crores, 76,000 crores, and $10 billion of the fund that NREGA gets, we believe somebody has to fund the civil society organizations. That is RCRC and several other organizations that some capacity building programs of Chandra support us, support many of them. But that capacity building all the NGOs is required and funding of their human resources required, because then the brains will work on doing that. On the other hand, there is another entity called for-profit enterprises also. My belief is that every farmer is an entrepreneur. And I want to propose 6 lakh entrepreneur at least in this country. There will be 30,000 crores. That is my calculation. I was saying about 3 billion, 4, whatever that is. Are they ready for disclosure? As I said, we have a pressure levels. I think the key constraint is this, that today we are used to writing proposals. If Axis Bank Foundation needs money, needs to give us money, they will not only ask us to write a proposal, they will do their due diligence, they will send people to find out whether Wade's organization or in Narendra's organization or somebody else's organization actually working on the ground. Now, therefore, people are a little bit concerned that we can do all the disclosure. That people can write balance sheets, people can disclose them on their websites, you can also send social auditors. But whether any money will come here or not, because that much more work is required, that is one feeling I get when I consult my colleagues. We don't know. We are used to writing proposals to Azim Benji or Tata Trust. So there is a certain kind of, we call it static fiction or whatever. But I think if we can get some money coming in from CSR into social stock exchange and some carrot is there, people will begin to work at it. Secondly, I want to say that if donation is allowed through ZCZP, some government finance ministry and government effort to, if some effort is made that actually money is there in the pot, then I think, let me give a story. Even a beggar on the traffic junction, you may have come across many beggars. They already have some money in the pot. So, somebody, then only you get encouraged.
Leverage.
There is leverage, there is something already there. That means this is a good beggar, otherwise it is not a good beggar. So if we can put some money already into social stock exchange, either in NSE or BSE, that people see actually This is one place to come to write proposals. I think there is a readiness especially in the coalition that we lead, which has today a turnover of 1,300 crores total. We spread 15. I can assure you there would be a desire. There is a desire to become transparent already. They may be doing it in their house in the sense of the balance sheets are not closed that way. But I think in a number of places, balance sheets are also on the website. In our coalition, we are running an MIS program where everybody's data, at least for last 3 years, balance sheets, income statement, or profit loss, receipt grant, whatever you call it in the lingo, they are available. And we would welcome the effort of the social auditors also to come and see the work. So I think there is a generally, one is a push factor because CSR money is reduced. FCRA also has reduced the capacity of small organizations. There is a push factor. Pull factor will be that SEBI will provide legitimacy, it's a validating platform, it's a well accepted platform, it's the best stock exchange in the world. Compliment Amarjit and your team. I think there is a certain there's a huge amount of interest, but we have to do the leveraging first. Thank you.
Yeah, thank you. And if I can sort of pick your example of beggar on the street, but also at times you look for a credible, genuine person who needs funds and you want to give funds, right? Because you are not very sure who is genuine or not, who is a part of the record as being a beggar, or we don't know, right? So I think probably this exchange can help fill that gap, and there is a sort of a cultural shift required over time, I think. But Amit, please.
So I know you have a question. I just wanted to respond to a point you made. See, why are exchanges like this really important? Because if you don't have platforms, then unfortunately there is great information asymmetry and power dynamics between a few givers and many takers, and which is what I think he was alluding to. Money is available with a few people, and then they can set the terms at which, many takers who need that capital want to come to them. That's true about capital markets, by the way. If you go back in the 90s, when all of us, as intermediaries wanted to help fund Indian companies, it used to be FII placements, and 4 or 5 large investors would define the terms at which those placements used to happen. Today, that's not the case because you have a vibrant, capital market where, in fact, domestic investors are far more active than FIIs, and retail investors exist as an option. So you don't even have to worry about, institutional investors in many cases. The situation, I think, that from a social stock exchange perspective is, and this is where I think India will at. Today, philanthropic wealth is no longer concentrated amongst just a few foundations. If you just look at the last couple of weeks, Indian Institute of Sciences got funded by 2 first-generation, owners who made their money in IT services, like Mindtree founders. And if you see all the people who make money in the unicorns, they are actually becoming very generous as well. And what the social stock exchange will allow a lot of people to do is people in this room will be able to take similar decisions, and the power of numbers will become very low. Each person can basically give 10,000 rupees, and then a million people give 10,000 rupees. It becomes very meaningful numbers for an organization. And I think that is how change will really happen. You don't need that one large organization to take those.
Right. And also, very quickly, probably the respect for social investing will no longer a regular situation.
Yes.
I mean,
No one needs to be a beggar.
right. So
Dress like a beggar, but don't have to live there.
so that I think is probably happening, and that's a good sign.
Yes.
So now I should come to Pushpa. Pushpa, is the founder of GuideStar and done a phenomenal work, in terms of developing a certification program for nonprofits for identifying credible NGOs. I mean, what we are trying to do through Social Stock Exchange is already been, doing in some way that service to the society. So I believe your certification is backed by rigorous due diligence on various aspects. And an important challenge that NPOs or non-profits still face on Social Stock Exchange will be preparation of the fundraising document, which we also mentioned in writing proposals. So what would be your advice, from the practical standpoint, to non-profits in this regard? How should they write their proposals for raising money on Social Stock Exchange? And what are the critical disclosures that you look for when you rate them as a part of your due diligence process?
Thank you. That's almost coming to the nuts and bolts. But I just want to pick certain points from the other panelists and kind of build this response. So 2 decades ago, I came from the for-profit financial services to perhaps India's first response in a financial services approach to bringing money or retail money into the non-profit sector, Give India. And it's been a great experience since then. So I would say about 2 decades of dabbling in putting small pieces of the ecosystem into place has been going on in the sector. Far from the limelight, not grown at a pace that one would have wished. But I think the timing of the SSC is so great because it's almost like now leapfrogging from conventional telecom lines to going into fiber optics or even the next generation. So basic digging work has been done. The pathways somewhat are there. And now how do we kind of mainstream and bring that big push? I think we're somewhere there. So all of the things that we've been talking today is not completely new to not-for-profits. And there's been remarkable, proactive, a desire to do good in a professional way since the 2 decades that I've been seeing. So when the various terminologies we use today are no longer Greek and Latin to the sector. But yes, there's a long way to go. In fact, the first online social change marketplaces meeting took place in South Africa by the Indian Ocean in October of 2004. And I was still very early into the sector here and could identify, some of those key blocks that were missing. And that is how this GuideStar thing was born in my mind. Like, there's such an asymmetry of data. There's so many givers, and we were struggling to find nonprofits that matched in terms of the thematic area, the type of governance and all of that is required. So some of these pieces are there. So from what we have been looking for in the framework, in our current certification program, where GuideStar India has done over 5,500 certifications in the last 5 to 6 years. And there are, organizations who are labeled as platinum, gold, silver, at the foundation level, transparency key. All of these have been done by nonprofits on a voluntary basis. Over time, different stakeholders, whether this private philanthropy, foundations, and even some government agencies are including that as one of the key information inputs into their giving decisions. But these organizations, by leap of faith, wanting to embrace this, transparency and public accountability, they came forward. So I would say a big shout out for those organizations. Can you believe 11,000 plus NGOs today are voluntarily putting out their PAN number, their registration documents, their contact information on GuideStarIndia.org? And 3,000 plus NGOs have put their tax returns. Many of them have put their financial documents. And over 800 NGOs are putting up their policy documents, internal policy documents, their audited financial statements, all of their constitutional documents, their governance data, right? To me, that's a great signal. And I'm part of some of the international groups, an APAC group of 18 economies, We've been talking to the Middle Eastern North African group of some 22 countries, the Global Giving Tuesday group, which has over 70 countries. And I'm happy to say that our organizations, have moved quite way ahead in organizing their information. So like I said, the digging work has been done. Some thin pipelines are already there. But I would say there's still a need to reorient, adapt, and do a lot more things differently and in a better fashion. And I've identified 4 buckets. And thanks to SEBI and the 2 groups, and especially on the technical group, I've been very vocal, sometimes argumentative, and thanks for putting up with all of that. That many of these elements, not only from what we're doing in India, but globally, we've incorporated into the recommended framework. I'm also today going to talk about, what we see the patterns based on a sample of 90 nonprofits that have gone through our platinum and gold certification. So the gaps that I see are, first of all, in the area of governance. I think investors would like to understand, who are the people behind the organization, its management, because in a sense, you're trusting them to do the day-to-day affairs just as in a for-profit business. But what worries me is 21% of these organizations are hesitant to make disclosures of remuneration and reimbursements to governing body members. They're hesitant. They're not hiding. They disclose this to us when we are doing our due diligence. Voluntarily, they disclose, right? That's because of a lot of misconception, lack of education by the regulators, some of the intermediaries like, the professional auditors. They've been saying if you disclose, you could be caught up in something. Also, there is some dichotomy in state laws versus the income tax and FCRA. So some state laws do not actually provide you an opportunity to disclose what you pay to trustees and stuff. So we need to work on a bit of education, enabling, and building confidence. So I would see in this that work has to happen on the supply and demand side, and the regulator and intermediaries can facilitate this. Also, I would say for nonprofits, be a little more forthcoming in talking about your governing body and explaining why some of those people are there. When I came from the for-profit sector, you don't really see sometimes famous names, but these are amazing individuals from the grassroots who represent the community. You need to tell their story and build their profile in an authentic way. So that needs to get handled down. It's only a small 3% organizations they found have not been able to implement their own internal rules and regulations. And I would like them to proactively explain why. There's always a why, and that's so justified. I see remarkable willingness to disclose in this large set of organizations I've been working with, and I think many of them would be the early adopters to the social stock exchange. Another thing that I see is this whole conflict of interest transactions, which would be there, and I think investors in the securities market are going to be, capital markets will be concerned about that. And there I would say again the same thing, in education as to why these transactions have taken place. 9 times out of 10, these transactions are helping the organization, right? There is a beneficial rate at which you let out the property or you are giving the assets, etc. That needs to be explained. Otherwise, वो office का गाड़ी लेके कर रहे हैं, but actually वो घर का गाड़ी office के लिए use हो रहा है. So that story has to come out. I mean, this is normally what you hear. The other very critical piece for me is talking about, the theory of change and the impact reporting. So most of the conversations we hear in the framework and everywhere is, report on the change made, the outcome, or what are you doing, the results, the output. But I think it has to start with what have you set out to do yourself, and be it, I'm not talking about, the top-notch listed companies, but having gone to business school and worked with SMEs and others, articulation of vision and mission is a challenge for everybody. I went to business school and I still see a lot of business consultants not articulating it appropriately. So instead of lofty statements, and I would hear saying, foundations like Amit's and others, if they can build capacity in this key area, support leadership training in this key area, authentically saying, because each of these founders, their story is very powerful, why they set out to set up the organization that they have set out. And they have a clear vision which they need help with articulation. So I think there they need help. 16% of the organizations with us are struggling, these are good mid-sized organizations. A large number of them are above 50 lakh annual expenditure, which is not small in the non-profit space, but they're not able to do this. And because they're not able to articulate the mission and vision and the work, the activities they're doing, how is it in line with that? So we at GuideStar have been implementing something called the Charting Impact Questions. It's a very simple Word document we create with a lot of subtext, helping them to tell their story in their own words, but helping a potential investor understand what are the challenges, what is the context in which they are working, what is the problem they are trying to solve for, and why are those indicators important? What are the challenges in measuring those impact indicators? So, some years ago, many years ago, early in my career, I went to a school in Surat working for disabled kids. When I walk into the classroom, I am not yet prepared. It was early in my career that the biological age of those students are very vastly different, and the physical capabilities of those students are very different. The children sitting on the floor writing with their toes, to children who don't have arms, to children who cannot see. It's a mixed group. Imagine the challenge with the teacher. And it starts with picking up the kids from the slums first, giving them a bath. That's the role of the teacher. Would we ever imagine? And unless you kind of breathe and feel that context, these numbers don't make any sense, right? So this is very important to explain. And what we have failed to say why, because, initially, like as an entrepreneur, when I go and seek funds, there's a lot of prescriptory advice that comes in the first 15 minutes. And then you start saying, actually, we tried this is what we learned. We tried this is what we learned. So articulating all of this in that document. So, the way that prospectus document looks like, it has to be slightly modified to bring out these nuances. The third thing I would say is a lot to do with financial reporting with utmost transparency. This is a huge area of concern for me. About 25% of organizations are unable to do it today for various reasons. One is the normal right-brained orientation of people in the sector, but the other is this aspect has not been understood by the senior management in many cases. It has not necessarily been demanded by traditional funders, and the traditional chartered accountants community also has not been oriented to the realities. So it starts with not having accounting standards for societies and trusts. Apples to apple comparison doesn't happen. It starts with, so when you pick up the financial statements of an NGO, significant accounting policies are missing, notes to accounts are missing, hybrid thing, how do you even define your fixed and variable costs or your program and operating costs? All those nuts and bolts have to be very carefully done. So I was happy as part of the technical group, we had people from the Institute of Chartered Accountants of India represented there. A lot of engagement happened. And we are hoping that, like we said, this is laying the fiber optics. Hopefully SSC will bring legitimacy and recognition and coordination of all these key stakeholders to doing this. So this financial reporting with transparency is a big space where we need capacity building. I'm glad that even, in the last 1 year, we've done 2 to 3 workshops at the instance of either intermediaries or funders on compliance and financial reporting. So that appreciation is already there, right? The last point I would say is compliance with legalities. It's a maze, it's an ever-changing goalpost. And in these pandemic times, we've had several changes with respect to the Foreign Contribution Relegation Act and income tax rules. So this is where I think I would tell my colleagues from the nonprofit sector, and many of them are actually watching this virtually today, that we can be a little more proactive, educate our funders, including regulators, including intermediaries, on the know your donor policies that we need to practice because of public reporting that we need to do, and have a much more proactive dialogue with these authorities, because most often I have found that, we are missed out. The detailing is missed out because we haven't been there in the room to make a very cogent argument. So I hope that this framework will kind of facilitate some of these things. So broadly these 4 points.
Thank you, Pushpa. It's very insightful and coming from your experience. Well, it's a very interesting conversation that we are having. And I think we've just triggered, if you ask me, but I'm mindful of the time. So what do I do? And I hate to do this. I do a sort of a rapid fire, if you could.
Chess, you mean like that?
Current request. Because it's very, you don't get such illustrious color often. So I would probably take this opportunity to exceed our time by 10 minutes. And I do some sort of a rapid fire and request panelists to be brief, 2 to 3 minutes answer. So I'll start with, go back to Delhi, Dr. Balu. Sir, you have tremendous developmental experience of working with last mile people who need the benefits of this kind of framework. So what would be your advice, some practical tips to non-profits as to how they can approach and utilize SSC? I believe a lot of NGOs are probably watching this today, so it will be very useful for them.
I think the first thing I would say is we shouldn't worry about something which is coming up. We always have this fear of the uncertain, fear of the unknown. I think we NGOs must accept that the ecosystem is rapidly changing. I would simply say, go back to what most NGOs did during COVID times. It is a very difficult time. The demand for our services is very high. The support did not match the demand. Many of us thought we'll shut down doors. We thought, I even thought that 50% of small NGOs would shut down, but we survived. So let us have faith and confidence in our own resilience. We actually can, we have recovered well, but we need to keep pace with times. Let's not shy away from modernizing ourselves. It will not take away voluntary action. Let's not hide behind the spirit of voluntarism to be mediocre. Let us rise up and set a standard for other countries to follow. And I'm sure this debate of small, big, etc. are there, but I believe that we are mature and ripe. Philanthropy is not going to die. Social sector is an augmenting, complementing process. Social sector, stock exchange, it is not a replacement for philanthropy. So let's do away with all those myths and just focus on what we're here to do. Let's stay mission oriented, but mission orientation doesn't mean mediocrity. We can actually raise up, learn, and a lot of good talent is coming into the sector. Let's capitalize, exploit, learn the tools, learn the language, and learn to grow the sector further.
Thank you for that piece of advice. So, Mr. Amit Chandra, if I can turn to you on the day. So, there are a number of students and you had an interesting journey in terms of shifting from investment banking to social investing. So, what probably students would like to hear from you? What was the trigger for your shift? That is A. And I have a question B also. Now that you are in social investing, how does this tension of financial returns versus social returns play out in your daily life?
So Amajiji, I had actually 3 shifts, investment banking to pure mainstream investing, and now I spend a lot of my time in pure philanthropy. I do look at social investing mainly because I also chair CII's private equity and venture capital committee. So, but since we ourselves Bain Capital go to social investing, I have looking at social investing indirectly. I'm an investor in social investing funds, more as a LP than as a GP. But I can tell you one thing. I mean, since I landed up straddling all these 3 things, people who are watching this and who are young, I entered investment banking at a point of time when India was at an inflection point and it seemed like the most exciting place to be. I entered private equity about at the same time. We gave the numbers earlier, it was 5 billion, now 50 billion. If you're always looking at entering an industry, you must look ahead and feel incredibly excited. Of course, it's something that you must personally be super excited about, but it should always be an inflection point. Social investing is at that inflection point in my mind. It feels today, if I was young and getting out of college or my first few years of my career, I would choose social investing as the place to begin.
But what was the trigger? Sorry to interrupt.
For me, the triggers was always, as I said, that inflection point. I wanted always to be in a place where I could see, the country benefiting from that industry. I was always very ambitious, and I felt that if I could be in that place at what I call the right place at the right time, it would be hugely satisfying from a growth perspective. That's why I entered investment banking already. That I left the people and was running the largest investment bank in the country. I entered private equity because again I felt as an investor I would build great companies, and I moved more towards philanthropy at a point where I felt that life was a lot more about working with people like Ray and Kushal. But I would say that today, if I was starting my career, and it's important to be able to sustain yourself, I would start in impact investing. I think it is truly a remarkable place to begin one's career.
Thank you. Kirti, let me turn to you. So, you have been actively involved in mentoring social entrepreneurship, and I believe you have a very unique Buddha Fellowship program to provide young emerging leaders an opportunity to build development enterprises. So, can you share some highlights of this program and also share your thoughts on how Social Stock Exchange can promote social entrepreneurship? And what would be your advice to young social entrepreneurs? Number of questions first.
Yeah, thank you. And since we are a little bit on personal story, I was born in this world in the sense of corporate work. I did in 1981. When 8080 processor was in 1981, we were only getting the 8080 or 8088 microprocessors. And I joined that time TCS, and you saw the huge mainframes to fill half of this room. And I used to work with somebody who worked with PepsiCo in TCS. He was a tough taskmaster that I experienced first day. But I nevertheless, I left TCS not on my terms, on PepsiCo's terms. But that was to be and met Baba Amte and several Gandhians who were followers of Vinoba Bhave and Jayaprakash Nayak. I think that was a time soon after emergency, we were sort of annealed into that. In 1977, I was in IIT Kanpur. We saw upfront Professor Rupert used to teach us. When RSS guy got there in jail by Mr. Gandhi's regime. So given that background, I sort of turned very quickly to this sector and got stuck here. So when we thought, when I left Srijan in 2018, I stepped down. I thought I'd do something myself. So when I found that go around, look at young people, they're not like us. We wanted a long lifetime job. One of my classmates joined ITC and retired from it. So, but this generation, young people are aspirational. They don't want to join TCS, they don't want to join McKinsey, they want to be their own bosses. They want to be entrepreneurs like Flipkart guy or the Oyo guy and all of that. So we thought this is a trick. Let's go and talk to them that you can be entrepreneurs. But little bit on my terms, you can create social impact also, like community. So this is the core idea. And I will tell you, we set targets like 1,000 Buddha Fellows by 2030. All stupid targets we set to sell to somebody who will give us money to make fools out of them. I said, I'm a professionally well-dressed beggar, so that's what I do. But I found that 8 Buddha Fellows we have. I'll give you one example. There is a guy called Madhu Kohli. He's a 2018 IMA graduate. He is now growing Dutch roses in a place called Guntur. Anybody can tell me the normal Indian temperature in Guntur, which grows normally chilly, I went there 40 plus. This guy is totally mad. He's growing Dutch roses, Riley technology of greenhouses and all that. In 60 lakh rupees, 30 of his own and his own friends, and 30 from horticulture board subsidy. Then happened COVID. And the saplings that were coming from Madras, they got stopped on 20th, which is the day Prime Minister announced lockdown, and his truck got stopped and he could not plant. But he stayed on for 2 years and stayed in the bachelor's quarters in Guntur's block, some block place, and I've seen it myself. And then he continued, and finally this happenings came and he started in touch with 1 acre farm. From here to long distance you can see. My friend DK said they won't work, but it is working. Then he said, I want 2 more farms like that. I want 50 lakh rupees. Otherwise, I am going to join McKinsey. I said, please don't go away. You are my poster boy. Without that, how would I tell anybody to give me money? So then I told him the money, professor here at IIT Bombay, and he said, he's trustworthy. I said, yes. He organized 50 lakh rupees for him. So what do you call second round? What do you call? Second round financing? Series A, B, C, I just don't know whatever series. I only know AP or AP. That is all I know. So he got 50 lakh rupees more. So this is one example that tells me that today's youth is aspiration. I'm giving you IIT example. Let me give you another example. There's a guy called Satyam Bhandari. He's from Rudraprayag district. And he's from H.N. Bagura University. He's a Gandhi Fellow. Gandhi Fellowship, Vivek is listening or Raj is still at it. They don't teach them economics or management or whatever balance sheet, etc. He's not only sold 50 tons of millet last year, indigenous millet, and almost without chemical. Because Rudraprayag district, now he's doing chemical-free mustard. And I am organizing 25 lakh rupees as a working capital from Samundar. So no grants, etc. What I'm trying to say is that, in fact, age is with us, transition with us. Young Indians are aspirational, they want to be entrepreneurs. They are only part of that movement. And education is not a factor. It is about passion and zeal. This is the core idea. And I want to tell Prime Minister with your help, that every village should have an entrepreneur, 6 lakh entrepreneurs, and my calculation is that then we can get 30,000 crores from women's schools. The private capital. Thank you. This is my answer.
Thank you. Pushpa, you mentioned about moving from commercial side to social side. Can you briefly tell what was your take? I'm staying on the same theme now.
I think I was destined to be here. I mean, as a kid, my mother was a living example of being kind and generous always. So that was there even in my corporate sector job. And I was always looking for a value match in an organization I worked, value match in a boss, etc. But there was this little gap when my financial services company got taken over by a larger company, in the late 90s. And I used that gap period to dabble into all of my passions, right from starting a pre-primary school to teaching at business schools and, dabbling into business and all of that. And on 3 consecutive occasions, a communication by Venkat Krishnan, who founded Give India, just resurfaced, and we happened to have a conversation. And I was actually going to make him my client, but I actually started working with him because a very big natural calamity happened. That was the Gujarat earthquake. And I had just come in to see what the sector looked like. And from day one, it seemed like there was so much to do. And I was much better off spending my skills and whatever little I had gathered working with fantastic bosses in the financial services space. I said, there's so much I can do with this talent here. What do you say? The change, the delta can be so big with this limited time that I have. Let me try this. And it just took a few days to realize that this is going to be almost a journey of a lifetime. And there hasn't been a dull moment. And my mother recently passed away, and I was listening to, the scriptures and what people were saying. And they said, actually, the Vedas say that you need to spend a life of kindness and goodness and generosity. And I said, I couldn't be luckier because my work allows me to do that every day, right? And I get to meet people like this. And like I told Amit, these are the people I was thinking of when I heard that. And I said, it allows you to lead a decent life, to meet your basic needs and a little more than that. And there's so much of authenticity. You have genuine conversations. You understand life so much more. And you're also, contributing to building the nation. You don't suffer from competitive barriers. There's always this collaboration. It took a lot of unlearning in the beginning. You're used to having targets and saying, how do you map your competitors and how you're going to have a strategy, almost like a war. Whereas here it is like put the sector and people first. I mean, put humanity first, then the sector, then the organization, then you, and everything seems to be in sync. Doing good is a very beautiful thing. I mean, like I am experiencing it and I see the goodness in others and I feel they're doing so much, I do so little. It sounds very esoteric, but believe me, and I work with very normal people who would have applied for corporate jobs or others. They come and fall in love with the work that we do and the simplicity and honesty in the organization. And I think that's what kind of stays, you know. We all have our limited capacities and talent and time. This place is phenomenal. And over the years, there's a lot of the corporate side that has come in, right? I mean, the way you work. So it's no longer, I used to fear, you know, with my weight, can I walk into a village? Can I sit on the floor? And I could overcome all of this, having Jagli in Bhupani, going into a village where there's no transport, people willing to carry you. All of those things have happened, and I'm the happiest person.
I just want to say that it's incredible that sometimes just ideas which are born going back many years, and she talked about Give India. It's an organization she has immensely contributed to. It was just an idea that Mr. Bhagat Venkat had going back 20 years now of how to do exactly what we are all talking about today, which is build the framework of a efficient technology-based exchange which can serve the social sector as well. Mr. Babu chaired it for many years. I had the privilege of following it as the next chair. We had another generation transition a few years ago. And over the years, it has actually been able to channelize over 1,000 crores from donors like this of the private sector. And that is because people like Venkat and Pushpa actually selflessly gave many years of their life to build a technology platform that made things happen. Of course, at that point in time, there was no regulatory framework how making that happen. If that was there, I think that number would not have been 1,000 plus, it would have been tens of thousands of crores. And I think that is the opportunity for us.
I just want to build on.
Yeah, sure.
I think you asked this question, I have not answered in the first round, the capacity building. I want to, two examples I want to talk about. During COVID, RCRC mobilized 50 crore rupees. What does it tell? That people have intention to give, where to give, how to give is the thing on which SSC should capitalize. Every human being wants to give, which is what you are saying. But especially two examples. One is E.T. Chandra Foundation supported Grow Fund. Grow Fund, we gave and together selected 100 plus organizations, and they said, we'll give you 80 lakh rupees. And they will not ask any question how you will use it. And they successfully socialized it. RCRC also did one, but their core idea is capacity building. So they're just beginning those capital is spent in the COVID time, they needed money. So this is one example. I think we can go deeply, assess, get our learning, scale it at the SSC level. What we, the capacity building fund of 100 crore, would be doing. Same thing Dasra did. When they were asked, give recommendation from RCRC, I said, already Grow is giving, why should we go and further? But we were able to select, and they agreed 10 organizations, and the emphasis was, I said, yes, give everybody 75 lakhs, you're getting $100 lakh. No, I'll give only to somebody, Ajika Bureau. But finally, we suggested 10. They agreed, and out of the 10, 3 they gave to 75 lakh and 10 lakh to each other. All 10 of them are GuideStar certified. All 10 of them. So there is a backbone there. These two are examples of certification and how you can give disclosures, whatever auditing that is required, and the example of the fund is actually committed to capacity building. So our challenge is that 30,000 crores SSC has to bring to our not-for-profit and all of that. One last thing I find is that digitalization. One area where NGOs are very weak is technology. If we can digitalize, I think much faster these disclosures will also come and audit will also happen much faster.
Capacity building fund can chip in there.
Can chip in there. And Prime Minister is talking about broadband connectivity everywhere. So probably even in every village in Nagaland and Arunachal Pradesh also. Thank you.
It's so nice to hear your inspirational story. I must say that. I think I grossly underestimated the time for this session. I should have kept. And I have a very tough timekeeper sitting there. I don't know if we have time for any questions, Diwali. Subject to your permission. Can you take a couple of questions? Okay, so yeah, Bindu, please.
We lost Dr. Balu.
Couple of quick points. I worked in a stock exchange in a product for many years. So, it's always been like the productive process in a pharma company. Very few succeed, but those who succeed become blockbuster. And when I first started hearing about the social stock exchange, I was very nervous about the idea. And when I hear about Give India and all that, so people are already doing it in some way. What is it? Are we bringing a solution? It's in search of a problem, and that is something that I want to understand properly. I want to know what is the time frame that we are talking about? Is this around the corner, few years down the line? And the third thing is, we talk about ecosystems, and ecosystems have this whole co-evolution of something happens, something else happens, and so on. And I worry that if you over-engineer, you might just kill the whole thing. If you just...
Yeah, I can maybe I have a definite answer for the second question. So let me address that first. So where we are, and that's an important point. So we were mostly on the drawing board, so to say, so far. But our SEBI board actually approved the regulatory framework in September 2021 meeting. And in the recent meeting, the regulations, after the framework was approved, we started writing the regulations. So that was also completed. And in the last board meeting, the regulations have also been. And now we have to notify those regulations. The government has to also notify ZCZP, so we're waiting for that and so on. So we are in an advanced stage. And third question which you asked in terms of the ecosystem, see, it may look a bit of over-engineering. I read some media pieces also around that, but let me assure you, unless you have thought through, and this was debated a lot in our groups also, unless you have thought through all the links in the system, this would not work. And that is why my understanding is that some of the experiments abroad, they could not do much this area. And because these were the pieces which were missing there, that's what we decided. For example, capacity building. This is very important in our thought partners. So the first question really.
Yeah. No, I think you asked a very important question. The intent of a framework of this sort should be to vastly enhance flows between donors and recipients, and importantly, going back to the point that Bigil was doing, but even lower the friction in the process, because obviously, if you talk to anyone in the social sector, there is massive friction, the kind of things that we talk about. So I think both those things need to happen, and that should be the objective. If you look at any credible survey that has been done at any point of time in the last decade of representative Indian population, you will find that one of the biggest issues which prevents increasing the pie of giving in our country, it is credibility and trust. So while platforms like Give India, Keto, Milab, etc. exist, they can continue to exist potentially outside the framework of a regulatory system. What a regulatory framework can potentially do is materially enhance credibility and trust, which can then allow an ordinary Indian or even more sophisticated donors to basically participate in a framework like this, the way they would potentially not give, may also reduce the lazy donors, and it may also reduce skeptical donors who are sitting on the line, and allow them to basically come forward and participate in social change.
Yeah, just, the important thing is after the regulations come out and you start doing this, you should be ready to keep adjusting and changing. I think that's going to happen.
The stock market framework today looks so different from what it did 3 years ago, 5 years ago, 10 years ago, and 15 years ago.
Yeah, we will evolve, it's a new experiment. So we will learn. I'm not saying we are the perfect roadmap, we will probably make mistakes. That's how our, as Amit said, we evolve. One last question, I see a hand there. Please go ahead.
Let me say, last place I'm there. To me, individually, I find this one of the best sessions I would have ever attended. Now, I've been talking to Amarjit since thoroughly. Sir, you have already mentioned that SSC will be a separate segment in the existing stock exchange framework. How and what we have identified, this SSC segment will be requiring totally different kind of now. Maybe so to say framework or so to say opening to investors, so to say specific disclosure norms, and how do we are anticipating the level kind of 3 years, 5 years, 10 years around, how the successful factors are what the company going, how far our preparedness is there. Over this.
So if I understand your question clearly, I think you are having concerns around the disclosure space, right? That
Not only disclosure, till now, what's the event that has already taken place, and how far we have prepared? The strategy security, one of the segments is the existing structure.
How prepared are they?
how prepared? Okay. So, that's the question I asked the panelists also. And, I think the answer was that many of them are ready. And I think we made a fair progress. See, the problem is, this has not been a mainstream discussion in our society. And I'm glad it is picking up. And we need to increase awareness, and the awareness is increasing. So I believe, these are the people on the ground, and what they tell us that people are ready. There is a need for a structure like this. And I think it's an exciting experiment. So let's see how it evolves.
Can I answer this? One thing I want to say is that, see, every small NGO cannot just come up for a disclosure and you can't go to them for social update. So there is a role for, which I made point earlier in our discussions also, aggregators. Like CII we have for industry, or NESCOM we have for IT. RCRC, I'm just giving an example, but there are several collaboratives that have grown up during COVID. At least 2030 also is there. So there are these platforms begin to talk on the one hand act as a bridge between SEBI and stock exchange, social and the NGO. I think NGOs will also feel, this is a friend of mine who is talking to Mr. Amarjit Singh. And Amarjit Singh coming to RCRC is a clear indicator that we are also coming to you. So these processes are more important, constant communication. And in the public, just to tell you, it may happen. IDR has asked me to write an article on SS. So this kind of population, this kind of socializing and population is required. Thank you.
So, I don't want to annoy my people sitting there. So, let me bring this to a close now. But what I would like a big word of thanks to all of you here. And just keep it up. That is good for the society, for the nation. Thank you very much.
Thank you, sir.
No, sir, my contribution. You are also.
No, I'm just the moderator.
He is the master behind the scenes.
On behalf of SEBI and NISM, I have some small token of appreciation for the panel members. I request Amarjit sir to deliver the token of appreciation to Kusama. And I request our registered.
Okay.
Give a token of appreciation from Chandra sir.